All right, now we're talking back to work tonight, guys and gals. Wednesday evening, it's December the 9th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a great video in store for you guys and gals tonight. Charts are all prepped up in the background. As you can see, got the E-minis. Oh, we got the gold, and we got the oil on our radar for tomorrow. Speaking of tomorrow, got some big news early in the session tomorrow. We got a couple clouds, COVID clouds hanging over our heads as we go into tomorrow's trading session. Some big moves on the charts today. Got some ranges, got some rotations, got a lot to cover in this video tonight. Not to worry, I'm going to make sense of all the craziness and put together a good plan for us for tomorrow's trading session. Before we jump in, though, and get our hands dirty on these charts tonight, I want to make sure you guys are ready for tomorrow. I just want to make sure to remind you, though, if you haven't done so already, make sure you subscribe to our YouTube channel. We publish this nightly newsletter every evening, Monday through Thursday, with our best trade ideas for the following day. So make sure you don't miss another video for tomorrow night's newsletter. Make sure you subscribe to our YouTube channel. And don't forget, if you have any questions for me tonight, drop those questions for me in the comment section below. I'll get them answered as soon as I finish up with the lesson here tonight. And as always, I really appreciate you guys tuning in every evening to support this nightly newsletter. If you love this video as much as I enjoy making it for you, hit that thumbs up button for me. Always appreciate you guys showing the love here by hitting that thumbs up button for me. But enough of the introduction, though. Time is ticking, so don't forget, make sure you subscribe, drop those questions in the comment section below, and thumbs up if you guys appreciate the video tonight. Let's grab a look at the charts, though. It's a Wednesday. We're getting ready for a Thursday trading session. Look at the charts here for us tonight. What do we got right now? We got the S&P, we got the crude oil, and of course, we got the gold in front of us. Boy, bloodbath on the S&P, but can anybody guess where the S&P finished up the session today? A pendulum swing, baby, right? All the way back and forth. Man, this range just keeps on rotating back and forth. So S&P is a big pendulum swing down. We're very bearish right now on the S&P. And you'll notice, right, we started going sideways here inside of a range. So it's a bear market. It's a range-bound market, which means my goal is to find areas of resistance up overhead and get short. So I'm looking for some short setups up around the high of this trading range. There's one concern, though, we have on the S&P, and that is failed rotation. Now, is that failed rotation, is that a signal for a reversal for tomorrow? We'll talk about what a reversal might look like because, after all, a market that can go all the way up and come back down like we saw today could easily rally all the way back higher here. So we'll talk about how to trade the pullback and, of course, how to trade the breakout and reversal on the S&P. Got a big day coming on the S&P on Thursday morning. Not to worry, we're going to break that down into small pieces for you tonight. Over on the crude oil, right in the middle here, right on the oil, you'll notice oil is also stuck inside of range. It's a range-bound market. Bit of a bear bias on the oil right now. You'll also notice, too, oil has that failed rotation. Why is failed rotation important? Because it brings momentum into the picture, and we'll talk about why that's important for tomorrow. It's a range-bound market. In a range-bound market, my job tomorrow is to buy low and sell high. We're going to focus on failures, but that failed rotation, that's a big clue. And we'll talk about how to structure the entries, specifically trying to sell this market tomorrow, right? That failed rotation is going to be a big clue if you're really both a buyer or a seller, but we'll talk more details on that crude oil here in a moment. And then, of course, gold. Gold, all the metals, pretty much all the currencies coming down here today. Gold makes a big three-legged move down today. Three legs. Now, usually whenever a market makes a three-legged move, we usually see either a trading range or a really deep pullback. And so sometimes those deep pullbacks will turn into reversals. So I definitely want to be aware of how to trade a range-bound market tomorrow on the gold, and also, too, how to trade a deep pullback, because a deep pullback is not a reversal. And we'll talk about the difference in tonight's video so you know how to short it and how to buy it if this market does show signs of a reversal. So charts are prepped up and ready to go. Got a big trend on the gold. Got a couple ranges here and some rotation issues on the E-mini and the crude oil. I got a bunch of great trades I'm watching for tomorrow. Before we jump into the patterns, though, for tomorrow, let's just take a look here at the schedule here. Tomorrow, of course, is a Thursday trading session. As we look at the calendar for tomorrow, the first thing you'll notice is we got some big news tomorrow morning, right? There's definitely some big news. We got jobless claims, and we have the CPI report at 8:30 Eastern Time. You could argue this is the biggest news day of the week. We've still got a lot lingering out there right now. We still have some black clouds, as I mentioned, some COVID clouds, if you will, right? We're waiting for more updates regarding vaccines. Tomorrow, of course, as we mentioned earlier in the week, tomorrow is the big FDA meeting regarding the Pfizer, and I believe it's just Pfizer. It might also be the Moderna vaccine tomorrow as well, but that is something lingering out there tomorrow. We might get some updates at some point tomorrow morning that may definitely move these markets around, especially the E-minis, right, and the crude oil. And then, of course, stimulus, right? It wouldn't be a newsletter if we didn't talk about some stimulus, right? Stimulus is a word I hope I never hear ever again after this COVID stuff gets out of its system here. But all kidding aside, though, we know that today most people are blaming this bloodbath on the E-mini today by the bickering back and forth. We all know it was arranged, right? We all know. We'll grab a look at the chart here in a moment. So, but the idea here though is we're still bickering back and forth right now on Capitol Hill about stimulus. It's a he said, she said. They're delaying it. No, they're delaying it. So it's kind of some high school stuff going back and forth right now. Politics as usual on Capitol Hill. So will that break free tomorrow? We're going to wait and see, right? We'll wait and see if we get more updates regarding stimulus. We also, too, don't forget, we got rollover scheduled most likely for tomorrow on the S&P, the NASDAQ, all the E-minis, right? All the E-minis we should be seeing rollover for tomorrow. That's going to throw a little bit of a curveball into things here in the overnight. Shouldn't have too big of an impact, though, on the price action for tomorrow, but we are watching for rollover again on the S&P tomorrow. So those are kind of the big deals we're looking at for tomorrow. Now, again, we know tomorrow morning at 8:30 Eastern Time, we know we got that CPI report and that jobless claims report. This will be the big, again, possibly the biggest news of the week, unless, of course, we hear some more updates regarding vaccines and stimulus. The good news tomorrow, too, is, don't forget, 8 o'clock Eastern Time, we open up our trade room. So we'll get the trade room open tomorrow morning just before that news comes out. We'll get the charts all prepped up, right, of the overnight price action, and we're off the races for what should be a pretty darn good day tomorrow in our trade room. And don't forget, too, like I always mention to you guys, if you want to come out and trade this stuff with us, we open up our trade room every morning at 8 o'clock Eastern Time. I'd love to see you there, right there with me, rubbing elbows, looking over my shoulder, and doing it right alongside me tomorrow. It's the easiest way to learn and do it the right way is to come out and do it with me. I'll make it easy. I'll put a link for you guys to get registered for our morning trading session. We open up at 8 o'clock Eastern Time. I'll put that link to get registered as a member in the trade room or in the description of this YouTube video. So grab that link in the description. If you are on the blog right now at Sideways Markets, I'll put a big button for you below this video tonight on the trading blog. So grab the button below the video or grab the link in the description and come out and join me tomorrow morning in the trade room and every morning, Monday through Friday at 8 o'clock Eastern Time. Now, one last thing I do want to remind you here, guys, as we go into the end of the year, tomorrow night's newsletter will be the final newsletter of the year of 2020. I will not be publishing the newsletter next week and into the holiday. This time of the year, it's all about getting wrapped up, getting refocused, and getting ready for 2020. Not to worry, though, if you're a client of mine, I will always be available for you guys, right, when you need me. But next week, though, again, no newsletter next week. And, of course, our next newsletter after tomorrow night's newsletter will be the first of the year. So please make sure you mark your calendars on that. We'll talk about that for tomorrow, though. Again, grab that link, right? Grab that link for you guys in the description and make sure you don't miss tomorrow's morning trading session, 8 o'clock Eastern Time. Speaking of which, let's get some charts prepped up here. We know what the schedule looks like for tomorrow. Let's get into our charts. You got the S&P, got the crude oil, and, of course, we got the gold on our radar. The S&P, of course, I was talking about earlier here, everyone's blaming, right? Everyone's blaming the this bloodbath today on the bickering on Capitol Hill. But come on, right? If you watch this nightly newsletter, you know exactly where we were, right? We talked about this last night. That pendulum swing, right, just kept on going back and forth and back and forth. And we came in and we saw this a little bit late last night. We came in this morning and we saw the market had gone all the way up, right? Remember, it gapped up there overnight, gapped up in the overnight, right? The Asian session, gapped up, completed the pendulum swing. Remember, this is the range, right, from earlier on this week. We talked about this earlier in the week, right? The market goes below the range, comes back above the range. So we knew this was a major area of resistance. And we also knew that as the market came off of these highs, right, we knew this thing was going to get pretty interesting. Once it goes 1, 2, 3 reversal going lower here, you know the drill. Mark that low, right? Mark that high. And, yep, hold on to your hats, right? Getting short off that. What is that called again? It's called a 1, 2, 3 reversal into a hidden channel pullback. Gotta love these patterns, right? Gotta love these patterns here. And of course now, right, now the range is the middle. This is nothing new, right? This has been the same range all week here. Now we measure the amount above, and oh my goodness, look where we end up here again, right at the pendulum swing again. Maybe it was some bickering on Capitol Hill. It looks to me like technical analysis 101 as far as I'm concerned. That's why I tell my clients, turn off the news media, turn off the news television, right? Turn off the news websites, get off Twitter, out of the chat room, and learn how to use these charts, because the charts are what lead, right? The charts are the leading indicator, right? Not the news headlines. So bottom line is, without going into too much detail, we find ourselves all the way rotated now back to the other side of this trading range. Now, I would love to say we're going to go all the way back up and just keep this rotation party, right, going here for one more day. But we need to see a little bit more proof before we can go buying this market, because as you can see, the key takeaway here on this S&P is we're definitely bearish. There's no other way to look at this right now. We're bearish and we are into a trading range. Now, without sounding like a broken record, and I've talked about this a lot in last night's newsletter, whenever I have a bear market into a trading range, there are really 3 basic patterns I look for. One is I find a resistance level above the range, and I look for what I call a 2-try failure pattern. I wait for price to get above the range. I wait for, in this case, buyers to come in and try to foolishly buy that first pullback. Once they do that, we know exactly where people's stops are, right? Only rookies are going to buy that pullback, right? Professionals, by definition, professionals not going to trade that breakout pullback. And so we know rookies will be trading that breakout pullback. We know rookies like to use small stops, and we can target those stops by selling right into those stop losses. Because after all, what is a range? A range is a magnet, right? That range acts like a magnet. So one of my favorite setups, and we'll definitely be looking for this tomorrow, is a failure pattern up above the high of that trading range. Now, there are also 2 breakout patterns because we have a bear bias on this. One breakout pattern would be, we call a 1, 2, 3 breakout. This is that pattern we talked about off the high of the S&P today. You're going to mark up that low, mark up that high, and get short right off of that high. You'll notice I don't trade that first pullback, right? That first pullback is not reliable enough. You want to wait for that 1, 2, 3 move. Then find your short off the high of that new hidden channel. Then the third pattern is called a 2-try breakout. It's a strong move below the range. It is a shallow pullback to the moving average, a lower low in price, and a trap right above that high, right? We call these 2-try breakouts. So again, the key takeaway right now on the S&P, it's a bear market into a range. I would love to find an area of resistance and use a buyer failure pattern to get short above the range. If we take off the downside, 1, 2, 3 breakout into hidden channel pullback, or 2-try breakout as we go lower. Ready? So grab those screenshots. We'll go back to our chart here right now. And as I dig in closer now to my chart, I can see there's my trading range. Right? Here are some resistance areas above the range, right? And so I'd like to get short going up above that trading range. Now, you'll notice when I zoom in on this, I've got this note on the chart that says failed rotation, right? Now, what do I mean by failed rotation? Well, if you look at the chart, if you look at how the chart works here, the market will rotate back and forth, right? Just by nature, markets like to rotate back and forth. So they rotate up, down, up, and then we should be heading back down to retest that low. As you can see, though, doesn't look like we're doing that right now. So there's a couple things I've got to be careful with right now. If the market simply takes off to the upside right now that means we've failed rotation. That is a bullish clue. It's a very bullish clue. And like I mentioned earlier, because we are potentially going to rotate back up into that trading range again, right? Like I mentioned before, because after all, this spot right there, that 87 3/4, that 90 1/4 area, those are both magnets, right? In addition to the magnet in the range here below us, but those are both magnets, right, as we go higher here. So this is definitely a big clue, that failed rotation. So if I make this move higher here now, what's my concern? My concern is this move might be over, right? These buyers might be stronger than I think they are, because if they weren't, we would have collapsed back down to retest that low. That failed rotation is a big concern. So if I'm worried about momentum, basically, right? I'm worried about the momentum of the market. What I'd like to do now is, if I can get up around these highs up here, right? I want to get short up here at these levels of resistance, but I'm concerned now that this failed rotation really means this is a bear market waiting to go higher. And so I've got to time my entry by using a slightly more patient approach. And that is, instead of just simply getting aggressive and buying in, or selling into, right, a buyer failure pattern, right? Like, for example, this one back here, we go up, we pull back, we go up, and we crash back down again. Instead of just simply selling into a failure pattern, what I'll do is I'm going to wait to sell into what I call a nested failure pattern. Now, there are a lot of different variations of this pattern, but to keep it simple, what I want to see is I want to see buyers try once, I want to see buyers try twice, and once I can get those buyers committing twice on the pullback, now I know exactly where those stops are, and I can now target selling into those stop losses. Now, like I mentioned earlier, there are some variations to this entry pattern. For example, if I can get a trap above that prior high, that is my favorite way to enter. I can also draw a trend line off that high, right? Use that as the entry. So there are going to be some variations on that. In fact, I talk about this pattern along with most of these variations in our trading classes here at School of Trade. In fact, it's included in our free trading course. What I'll do is I'll put a link for you guys in the upper right-hand corner. If you want to get a deeper dive into that failure pattern, the nested failures, and the different variations that I use for that, I talk a lot about that in my free trading course. There'll be a pop-up there in the upper right-hand corner. Grab that pop-up, grab the free trading classes. You're going to love those classes because you'll learn my 4 favorite entry setups. One of them is a failure pattern. You'll learn the entire 3-step strategy, the same strategy we use every morning in our trade room. And I'll also send you hundreds of examples of how we apply those pattern setups to our favorite futures market. So if you're serious about your trading, I would definitely recommend you grab that free course linked up in the upper right-hand corner. And again, like I said earlier, I'll put all the important links you guys need in the description below this video. So that's one thing, right? If we can go up, let's see us buy buyers once, buyers twice. Again, trend line coming off the high, selling into stop losses, right? And then back down we go from there. Now, as you can probably imagine, if these buyers really get going, could this turn bullish? It definitely could. And here are some things to keep in mind as the market runs higher here. The first one would be, if we get a really strong move up here, right? And what I would do is, if we can get to a measured move, or even better, to exceed a measured move, that's going to be enough to tell me this momentum is turned. All right. So if we can get through a measured move, right? Think of like a measured move. Measured moves like what, 100% extension. If we can get up around that 138 to 150, if we can get through that 100%, that'll be enough to tell me this thing has reversed. And so let's say, for example, we do get that big, strong leg going higher here. I can gladly grab a trend line off the top. I can grab a trend line off the bottom. And then what I'll do in these situations is, as the market pulls back, I'm going to look for a very specific combination setup. I'm going to wait for the price to pull back to the low. That will usually get me just below the moving average. Then I'll look for a seller failure into a bullish pullback combination. Okay, these are very, very common after we get a 1, 2, 3 reversal pattern. Again, it's a failure pattern into a pullback pattern. Again, pullbacks, I cover those entry patterns, especially the combination setups in that free trading course that I mentioned in the upper right-hand corner. So that is something to keep in mind, right, as we go higher here. What would also be some food for thought here would be if the market was to really jump up, moving average comes over, we see a shallow pullback, a higher high in price. That would also be an entry pattern I'm looking for right there, right below that low. Right? Now that pattern probably looks familiar because we talked about this pattern to the downside earlier, but that is a fantastic entry pattern, right, as well. So we're going to keep an eye on these hidden channels, looking to buy the low of that hidden channel, right, as the market goes higher. Now, where do you think this market wants to go, right? If it does take off to the upside, any guesses where you think we might be going? Yeah, the other side of this range, right? So we go from one side to the other. Now, that seems like quite a big accomplishment, but hey, we saw the same thing happen today. So the target would be back up to retest those highs here. So now we get a pretty good idea for if the market pulls back, how to sell it, right? And of course, how to buy it as well. Remember too, if we go sideways here, we want to stay out of the middle, right? Stay away from the middle. If we just keep hanging out here going sideways now, I'm going to still wait for that nice big pop up, wait for that 1, wait for that 2, right? And back down again, right? We'll also look for, again, same thing, right? That 1, 2, 3 reversal, mark up that high, mark up that low, right? And go from there. Well, that'll probably happen later in the session tomorrow, I would imagine. So we can kind of iron that stuff out once we get into the trade room tomorrow morning at the opening bell. And then how would we trade it as the market goes lower? As the market goes lower, what I want to do is I want to remember that the range is a magnet, right? The range is a magnet. So what goes down is still likely going to come back up. So if I want to trade a breakout going lower, how would I trade a breakout? A breakout has to break free of this magnetic field. You know what I mean? Imagine there's your range. Imagine there's a magnetic field that stays in and around, just like any other magnet, right? It stays in and around that area, right? So if we can break free of that magnetic field, then we can get on with the trend going lower. So to do that, I got to get one of those 2 breakout patterns, right? For example, strong move down. Now a strong move down would be great, but we got to hold the pullback. We got to get the rocket boosters, right, to get away from the gravitational pull of this trading range. So show me you mean it with a strong run off the moving average. Now, it's very tempting to want to sell that breakdown. But if you sell that one, you got to sell this one and that one and this one. And they're not very reliable when the market goes sideways like this. So I'm not a big fan of trying to sell that first breakdown. I'm a much bigger fan, as I always say, of waiting for that 1, 2, 3 breakout. Then I can confirm now we're bearish and we've broken free of that magnetic field. I can mark that low. I can mark that high, and I always like to go after that first test of that new hidden channel. What do we call these again? We call these 1, 2, 3 breakouts, right, into hidden channel pullbacks. Now, you could easily say this is the exact same thing that happened from earlier on today. If you go back 24 hours ago, we went up, right? Yesterday evening, we went sideways, and the market rolled over, right? Remember this back here? That's exactly what happened here. Right? So again, this was a bull market, but it went into a range, right? Then what happens? It goes 1, 2, 3 going lower. what do? Again, unfortunately, you can't take that for short. You just can't take it. It's just not a reliable setup. I wish I would have. Believe me, I wish I would have sold way up here, right? If we're playing fantasy land, why not just sell at 3,800 then, right? So all kidding aside though, right? We got to wait for probabilities to line up, mark up that low, mark up that high, first test is always, right, the best test. Got a beautiful trap there above that high there, right? So you can see the pattern. I just want to make sure I point that out because it's a great example there from earlier on in the session. And then, of course, as we go lower here, right, another pattern would be, sometimes the market simply takes off to the downside. If it really runs lower, right, really breaks free here, watch for that 2-try breakout, that shallow pullback, that lower low in price, right, that trap high. These are always one of my favorites, but what you got to remember about these patterns is that leg down has to be smack you in the face strong, right? It's got to be like, whoa, right? That's a big move. It got to be a real strong move, right, as we go lower. And remember, I'm always trying to find, right, those hidden channels, right, that I can combine with that entry. Always trying to sell as high as I can. I love to use channels whenever we see a breakout. Now, where do we think these bears might be trying to go? It gets pretty interesting as we go lower here because there's a range down here. If we can get a breakout going lower tomorrow, keep your eyes on that 3630 to 3620 area. That's a big juicy range from Thanksgiving, right? Big juicy ranges, right, from Thanksgiving, right? We'll call it the turkey, right? The turkey range down there, right? The tryptophan range down there. But we got that range down there acting as a big magnet. So I think the plan tomorrow is relatively straightforward. My only concern again is that failed rotation. And I'm not going to lie, I'm pretty curious if we get a rotation back up to the highs again because we are definitely seeing that failed rotation is a big clue. It is a very big clue. So we'll see how that goes. I mean, think about up here, right? We saw a range up here. This, of course, very, very faster time frame needed. The range up here, that's what set things off, right? It failed to rotate. If you look closely at that range up there, right, if I zoom in up there, right, if you look at this closely, this obviously is difficult on a slow time frame, but that was the range, right, from earlier on in today's trading session. And look what happens. We rotate, right, fail rotation. Failed rotation is a big clue, right? So anyways, I'm getting very lengthy here with this video, but I want to make sure I show you guys as many examples as possible because, when I'm drawing on the screen, it's one thing. When you can see examples of it though, and again, like I mentioned earlier, that's why in our free trading class, upper right-hand corner there, that's why I send out examples, right, of all of these setups. So definitely grab that free course and be ready, again, for the S&P here for tomorrow. Let's keep going here. S&P looking really good. How about some crude oil? Boy, crude oil, you can definitely tell oil is on the edge of its seat right now between a stimulus plan, which of course will bail out the airline industry, along with a vaccine. Oil is really being bombarded with information right now, and you can definitely feel it. Not to mention, I'm not sure if you saw that inventory report today. Did you catch the inventory report today at 10:30? Right? At 10:30 this morning, we saw that weekly oil report. They were expecting a negative 1 million. And did anybody see what they got? For the inventory report? They got a cool 15 million build. I'll tell you, I hope the guy that's counting these oil inventories is not the same guy or gal counting the COVID cases, because something tells me they might be missing their numbers out there. I thought that was just a riot, right? Anytime you want to trust the government to do your work for you, right? Look at those numbers, right? Whoever's counting the barrels over there at the DOE needs to be fired and find somebody else. All kidding aside, though, there is a hell of a lot of oil out there apparently right now. 15 million barrels, right, in inventory, over what they were expecting. We could be swimming in this stuff, right, if we needed to here. But the bottom line is oil, again, you can see oil's having a lot of whippiness, a lot of big moves here. And we're still in a range. Let's face it, that's pretty much exactly what's going on right now. We still have this bear move down. We still have this trading range. And, like I mentioned, earlier, we want to find levels of resistance. up above the range, keep on fading those breakouts, with those failure patterns, right? Buy low, sell high, avoid the middle. Remember too that what is a range, right? What is a range? A range it's a balanced area. A range is a magnet. I want to avoid the middle. I want to buy at support levels below the range. I want to sell at resistance levels above the range. And I want to focus on failure patterns, right? As the market goes up, I wait for buyers to come in. I look for them to get long on the pullback. That tells me exactly where stops are, and I can sell into those stop losses. I'll tell you, it's tough to be a buy. It's tough to be a bull on this market right now because of what's so obviously happening in the world here right now. So there is definitely still a bear bias to it, both fundamentally and technically, right? As you can see, this thing still really doing a good job at holding at these highs go. So we definitely want to focus on getting short above the high of this range. It's a lot like the S&P, but you'll notice there's one big concern here, right? We've got our pendulum swinging back and forth, right? There's my range. The amount of the move below the range is equal to the amount of the move above the range, give or take, right? Give or take. This doesn't be exact, right? But give or take a few ticks here and there. If you draw the range correctly, which you'll learn to do, right, in our trading classes here at School of Trade, when you grab the range correctly, you can measure those pendulum swings. You can see now, though, we should be heading back down once again and completing this rotation. Right? They should be rotating back and forth as we go. So that failed rotation is a very big clue, right? If we run lower here, right? If we run lower here right now, that will solve that problem. It will also potentially lead into a breakdown. But if we go higher here, right? If we go higher here now, what's my concern? My concern is something happened. Something I don't know what the problem, I don't know why, but something clearly changed the opinion of value on this oil futures, right? For whatever reason. So that failed rotation, if that holds up and we get this market running higher here, again, I'd love to get short up here, but I'm really concerned about that failed rotation. So it's a lot like on the S&P where if we do get this run going higher here, I want to be careful, right? I want to let these buyers try once, let them try twice. Once I get those buyers, kind of wrapping that rope around their neck, so to speak, right? Now I know where those stops are. And most importantly, I also know that all the buyers are in. That's the reason why I always wait them to try twice, right? I wait them to try twice. That way I know the aggressive buyers on the shallow pullbacks are in. The more experienced traders, they're getting in on a deeper pullback, right? They're waiting for that second try, right, to go long. And then once I get everybody in, now I know if they keep it going, it's a breakout, right? If they don't, though, you know where we're going, right? We're probably going all the way back down to retest that low. This is why I always focus on selling above the high and, more importantly, selling at resistance levels above the high, because you can take a relatively small amount of risk for a pretty darn good reward, right, on a little short-term day trade there off that high. And of course, oil loves to make these moves quickly, right, once we get there. So that is definitely still the plan here. Just like on the S&P 500, I'm looking for what I call a nested failure pattern as we go higher, right? Pull back to the moving average here. Buyers try once, buyers try twice. Now, again, a lot of variations of this pattern, right? Could be a trap above that high, right? Some really good examples of them will be like this, where it's almost a double top. It pulls back, try trend line across those highs. These are also some of the best entries you'll get, right? Draw that trend line right across the high up there. You can see kind of how that works, right? We go up, we pull back, we come over, right? And back down, those trend lines coming across that high though, right? So use those trend lines to your advantage. But again, let them try once, let them try twice, right? Let them try a few times when you get those big, strong jumps, right? As we go higher here. So again, it's called a nested failure pattern. Now at the same time, right? Like I mentioned before, if we can get a pop up, if we can get the buyers holding a pullback and we can jump off the moving average, bingo. Now we have a bull market. Now we have a breakout market. But again, I can't just assume a strong move higher is going to hold, right? I have to see proof. And this is a good example right here. You definitely don't want to get caught buying that first pullback, right, on those breakouts. That's why I won't be buying the first pullback on this one. Every once in a while, I miss them. Every once in a while, yeah, I wish I would have gotten into it. But again, we don't want to think like that. We want to think about long-term probabilities. Once it holds, mark that high, mark that low, right? Find that pullback. And as I mentioned earlier, this pullback is really usually broken down into as this moving average comes up, we're going to usually pull back below the moving average or in the low of that channel. It'll usually be a seller failure into that bullish combination, right? Pullback combo, right? That's a really powerful setup. Again, gotta wait for that 1, 2, 3 breakout pattern, right? Gotta wait for that 1, 2, 3 breakout. And then of course, if it does start ripping higher here, right? Strong move up, real strong move, shallow pullback, right? Higher high in price. You know me, that trap high is always a great option. And again, I'm always trying to find these hidden channels, right? Always trying to find these hidden channels. So we'll obviously look for more of that tomorrow once we get this breakout going higher here. I'm not going to chase the market higher, right? Don't want to chase it, especially a market like this right now, which could easily go up and come right back down again with a nested failure pattern. So as the market goes higher there, now where do we think the buyers want to go here? Where do the buyers want to get to? 46.68. Right, 46.68 is that first week of December top. 46.68 there, right, will be the objective for these buyers. And remember, above 46.68 is like no man's land, right? We go to 50 before we go anywhere else besides that. So we'll see what happens at those highs here. Now, again, on a range, you want to stay away from the middle. Right? Stay away from that middle. If we go sideways here for a while, right? If we go sideways here, not much changes. If we poke our heads higher, we still have this concern about this momentum now. So if we go sideways and we run higher, it's the same basic idea, right? Buyers try once, buyers try twice, right? Selling right into those stop losses. Or again, 1, 2, 3, breakout. Mark that high, mark that low, right? First pullback is the best pullback on those 1, 2, 3 breakouts, 1, 2, 3 reversals into hidden channel pullbacks. As we go lower, right? As we go lower. Now, this is where things could get really interesting as the market goes lower here. Now, we've talked about how a breakout would look, right? So a breakout would be we retest these lows, we hold that pullback, and we jump off the moving average. That's a 1, 2, 3 breakout. Remember, though, again, don't be naive. You can't just say, well, it's a very strong move down, so I'll sell that first pullback. No, right? If you see a strong move down, wait for the bears try once, wait for the bears try twice, and rip that sucker going higher, right? That's called a what? A nested failure pattern, which reminds me, that's exactly the pattern you would look for to buy it back up, right? Wait for the bears try once, wait for those bears try twice. Love to get those traps, right? Again, what do we call these again? We call these nested failures. Why? Because a failure inside of a failure, right? There's two of them inside there. They're nested, kind of like those nested dolls, right? The Russian nested dolls, right? Those little cute little dolls. Doll instead of a doll instead of a doll. So that's where we get the term nested from. But that will be a nested failure pattern with a trap on it, right? Or it's a nested failure with a trend line, right? Or it's a 1, 2 into stops, right? So lots of easy ways to do it. And again, there are some variations to that nested pattern. We'll go over more of those smaller details in the video course, obviously, as well as in our trading tomorrow. But that will be how I'd buy this thing, right? Going back up into that trading range. I would not try to just simply use a typical seller failure pattern, which would be great if the market was bullish, right? If I was bullish going into a range, right, and then I pulled back to an area of support, absolutely, that'd be a great buy pattern if I was bullish, but I'm not bullish, right? I'm bearish. And that's why we got to wait for them to try twice before we can buy into those lows here. So 1, 2, 3 breakdown or strong. I mean, really, it's the 2-try breakout pattern has to be very, very strong here because we're going to have to break through this low down here, right? Pull back, shallow pullback, lower low. I mean, in all reality, that would be a pretty darn good short, right? If I could get underneath that low, one of the key giveaways, by the way, is get that moving average underneath that low, right? A lot of times you'll see a big breakdown, but the moving average won't clear underneath it. If you can get that moving average below that low, that usually is the giveaway. Okay, now we have enough push through. Again, strong move down, shallow pullback, right? Higher high in price, or lower low in price, and then trap high, right? For that short going lower here. Where would our targets be going down? 43.92, 43.33. That's the granddaddy of all of these support levels on this chart right now. $44 a barrel, though. If this thing gets bloody, especially if we don't come to any conclusion on the stimulus bill, right? The big deal right now with that stimulus bill is a lot of it's going to airlines, along with that vaccine too, right? The vaccine is hanging over their heads right now because, in one way to think about it is a vaccine allows people to kind of get back to normal, jump in an airplane, right? And kind of rest assured that they're covered on this. So a lot of that is pending right now. And I would imagine if we hear more about stimulus in the airlines, if we hear more about vaccines, this oil will get some breakouts, right? Either up or down. And now you guys know how to trade them for tomorrow, right? So stay out of that middle. Buy low with nesteds, sell high with nesteds. Now, one thing to keep in mind too is if we finish off that move, right, then we come back up into that range now, and then we go higher, right? Now I can get back to normal because we're getting this rotation completed, right? So we'll talk more about that tomorrow, obviously, in the trade room. But if we complete that rotation, we can kind of get back to normal trading here. But right now, though, if all we do is go straight up here and go higher here, way too much momentum here, right, for those bulls. All right, let's keep this thing going here. Let's wrap this sucker up here right now on the yellow metal. Over on the gold. What happened here on the gold today? Boy. Gold falling out of bed here today, bringing everything down right along with it. What's the key takeaway here? The key takeaway is a huge move in one day. Not just any move, but three-legged move, right? 1, 2, and 3. Whenever we see a big three-legged move, you probably have heard me say this before, but most trends come in threes. So anytime you see a big three-legged move, you know that it's not guaranteed to be done, but usually a big juicy three-legged move usually means the following day we're going sideways into a range, or we're getting a really deep pullback, right? A really deep pullback. Now, I will say every once in a while, you'll see these markets put their dancing shoes on and they will go for one more leg, right, going lower. So I'm not saying it can't be done, but it usually is a pretty remarkable situation for a market to go 4 big legs. Usually when a market goes 4 or 5 or 6 legs down, it's usually because those legs are relatively small, right? Not that I have anything wrong with small legs, right? But in trading sense, right, usually smaller legs are going to give you more, right? But when you get these big, right, I'm trying hard not to make too many jokes about this right now. Keep it together here, Joe. But usually when you see these 3 legs down, right, they're big legs here, right, we usually only get 3 of them. So in this situation, I'm wondering, are we going to get one more leg here? Probably not. We're probably getting either a range, right, or a nice deep pullback here for tomorrow. So that's the key takeaway. Okay, either a range or a deep pullback here for tomorrow. Now, let's kind of unpack this a little bit. Let me get these big legs right off of this chart. That was horrible. So now you got to know where the next one is. So kind of unpack this here real quick. I've drawn in what is probably the most aggressive channel here, and that is off of those lows, right? You're drawing off of those lows, draw the channel backwards, and then just simply sell, right? Sell the pullback to that channel. So that kind of creates the top or the minimum of the sell zone up here. Then I've also gone out, because I like the way this one looks, and I've marked up that low, and I really like how it lines up off of those highs. That creates the kind of the upper side of this battle zone. And of course, on top of that, I've marked up that prior swing at 45.6, right? Because that, or 45.5, it looks like, excuse me, because that's a trap area to combine with it. So that kind of creates this sell zone. In all reality, you could look at this and say, this is your sell zone, right? This is your battle zone, right? That could easily be the case there for you. So above that 45.5 is kind of the ideal, right? The ideal scenario. Whenever I see a market make these big moves down, though, I'm anticipating a relatively deep pullback, right? A relatively deep pullback. Now, if we get a relatively deep pullback, the two most common entry setups you want to be ready for are going to be a two-legged pullback, like this, where we draw a trend line up the middle, we get underneath it and use it as resistance later on. So this will take some time, but it'd be worth your time. Now, again, we call these two-legged pullbacks or 2LPs. So whenever you're expecting a deep pullback, think about that trend line running right up the bottoms there and use that trend line to your advantage. Okay. Now, sometimes we don't get that deep pullback. And what happens is we get something like this, where the market collapses, it tries once and goes lower. And we're nowhere near getting that trend line. If that's the case, I don't want to chase the market lower. I want to sell as high as I can sell. I want to sell at resistance too, by the way. And that's when you break out a trap. Right? So if we don't get that pullback to the ideal location and the market kind of collapses back down, look for a trap entry before you get back down to retest those lows. Now, trap patterns are your go-to entry pattern whenever you're worried about selling too low, like in this situation, or buying too high. And remember, trap patterns are one of my 4 entry patterns we talk about, right, in that free trading course, which again, I've mentioned a couple times now. That little pop-up there, that little info icon up there, grab that link and learn more about those traps. So a two-legged pullback is definitely going to be on our radar here, whether we get that up and over or whether it goes 1, 2 trap, right, and go from there. Okay. The other one would be if we just keep on running higher here, there's no need to worry about that pullback, that trend line now. Now, what's the problem? Momentum is the problem. If I want to be a seller on this, and this is what usually happens. Most common situation is when a market makes these huge moves, right? These huge moves, right, coming down like this, they bounce on profit taking and buyers refuse to give up control of it. And you got to wait for them to try once, right? Wait for them to try twice. Once they try twice though, now you got their stops in play. Now you can sell short into those stop losses. Again, draw that trend line right off those highs, short off the trend line, right? Again, there's a lot of different variations of this entry pattern, but you want to look for that nested failure if you get that deep pullback. Right? So it's a two-legged pullback or a nested failure as we go. And also, too, keep in mind on this, when we get these big, deep pullbacks and the buyers try once, buyers try twice, a lot of times the market goes into free fall, right? After it collapses because it catches all the buyers off guard. When that happens, look for another trap because you'll almost always see a follow-up trap entry just above that prior swing. So think about that combination, right? It's a nested failure pattern, buyer failure, buyers once, twice, right? We sell into stops. The stops get run, right? All the buyers become sellers. They flush out the buyers. Price collapses. I don't want to chase after it going lower. So what do? We sell as high as we can with a trap entry pattern. All right. Now, obviously, right? Those of course, the pullbacks that get short. If we can jump up, if these buyers can hold this pullback and can rally higher here, what does that do? That creates a reversal. Okay? Reversal, 1, 2, 3 reversal into hidden channel pullback. Remember, get to the low of that channel here, get below that moving average. It's a failure into pullback combination. Again, I do realize I'm covering a lot of information right now, but again, I want to make sure we're ready for tomorrow. And if you're here today for the first time right now, don't worry, grab that free course, right? The free course I mentioned, or just come out and do it with me tomorrow morning. I'll make sure we kind of get all this organized again tomorrow. I'm gonna do it together, right? So if you're here for the first time today, I'm just simply drawing the screen right now. That free course I mentioned before, that'll bring a lot of this together, right, in a much easier format. And of course, tomorrow morning, 8 o'clock o'clock Eastern time, I'll make sure you know exactly what to do, right, and how to do it correctly in the trade room. So let's do reversal. Where would the buyers be trying to go tomorrow? The buyers are probably going to hunt for that kind of rangy motion, rangy stuff up there around 1870, right? That'll be an easy target there for those buyers. The sellers, though, right? What if we don't get this pullback, right? What if we don't get this deep pullback? What's my plan here? If we don't get this deep pullback right now, couple things I'm looking for. One would be if the market pulls back, just keeps going lower, a trap entry. Right? A trap entry. You can definitely look for a trap entry here because you have all of this strength, right? That is a very strong move down. And anytime you see a very strong move in one direction, you know there's a big bullseye right back to retest the low. So if we do keep bleeding lower here, don't just short it, but wait patiently for your professionals entry and get in off a trap. Right? That way you can get in before we get right back down to retest the low. What we may see too is we may see it roll over and then bounce. And if that's the case now, that's where your range comes in. If it turns into a range now, what do we do in a range? We find resistance levels above. We wait for what? We wait for the breakout. We wait for buyers to buy the pullback, right? And we sell above the high, right? We apply the range strategy, which we talked about quite a bit already, right? We're selling buyer failures. We're selling 1, 2, 3 breakdowns, right? We're selling 2 try breakout patterns. So that same kind of a diagram we drew in, right, earlier on. So if it does go sideways on that, and then, hey, if the market keeps on piling on, if we keep going lower, I'd be very careful getting short until we get through this low, right? That 24.9. That's a big low, right? It's a big low down there. But you'll notice there is a lot of open space now, right, to start to tumble back down to these lows here. Right? So if we can get this party going lower here, we get a lot more room to go back down to those lows here. But I'll just be careful though. Don't get too aggressive going below those lows here, 1824.9. What I'll do is I'll literally wait for, like I mentioned earlier, we have that fourth leg lower, right? So there's your one leg, there's your 2 leg, there's your 3 leg, your 4th leg is right there. So let's just say we've got to get through this area. Right? We've got to get that 1, 2, 3 running, grab that low, grab that high, right? And get short off it. What you don't want to do is get caught chasing it lower, just have it bounce right back up in your face here. So really make sure we get that 1, 2, 3 move going lower here. Be very careful running down, trying to get short. In fact, as we go lower here, it might not be a bad idea to start looking for those nested failures, right? Bears try once, bears try twice, right? Trend line and buying it back up. I'll tell you right now, it is very rare for a market to go more than 4 big legs. Again, if they're smaller legs, right? 5, 6, 7 legs. These are not small though. They're very, very big. So you really got to be careful getting short down here without the right entry patterns. All right, guys. Obviously, I'm sure I missed a few things here on the charts here tonight, but we're running out of time here right now on this lesson. Hope you enjoyed it though tonight. Don't forget tomorrow morning, 8 o'clock Eastern time. We're gonna do it all again, right, tomorrow morning with all the clients, members in our trade room. I would love to have you there, right there with me, right? Look over my shoulder. Do it right there with me tomorrow morning at 8 o'clock Eastern time. It's easy to get registered. I'll put all the links and all the information you guys need to get registered for tomorrow morning in every morning's trade room in the description of this YouTube video. And as always, if you're on the blog right now at sidewaysmarkets.com, I'll put a button for you below the video tonight on the trading blog. Please don't be afraid to call the office. I'm always here to answer calls. If you guys want to call the office, got live chat on the left, live chat on the right. And as always, you can, of course, drop questions for me in the comment section below. And I hope by now you subscribe to our YouTube channel. That way you don't miss tomorrow night's newsletter. Before tomorrow night, though, we got some butts to kick tomorrow in the trade room. I'm looking forward to seeing you tomorrow morning in our trade room. We'll update our charts tomorrow morning and get ready for battle at 8 o'clock Eastern time. If not, we'll come back and do tomorrow night, right? Tomorrow night for our next edition of our nightly newsletter. As always, my name is Joseph. Thanks for tuning in here tonight. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.